Hi everyone, welcome to another Weekly Forex Forecast for the week ending April 3rd, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the Euro USD, the Pound USD, the Dollar Yen, the Pound versus the Yen, as well as the Euro versus the Pound. The incredible moves continue in the FX market, including the Euro USD and the Dollar Yen, so we're going to discuss both of those in detail in today's forecast. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, as always, we have the Euro USD, and if you watched last week's forecast, I documented how the pair had closed below the bottom of this descending channel. So if you've watched some of my recent videos over the last few weeks and months, you know that this channel extends from the 2019 high. The bottom of this channel extends from August of 2018. So we talked about it back here when it was coming off of resistance and also back here when it was coming off of support. Furthermore, we had this recent false breakup here above the channel top after the pair reached our target at 114.50. This close right here confirmed the false break. 111.80 then became resistance, and the pair also reached our target down here at 107.25. Now, one thing I said to members in last week's forecast is that there was always the chance that this down here was a false break, just as it was up here. And sure enough, we got that daily close above 107.50. So if you saw last week's blog post, I said that a daily close above 107.50 would determine the pair's future direction. Sure enough, this candle closed above it. We then got a retest of 107.50 as support, and the Euro USD rallied ever since it closed above 107.50. So for the week ahead, the same rules apply. 110.50 is support, and this area between 111.50 and 111.80 is going to be resistance. 111.50 is the top of that channel, and 111.80 you can see back here was resistance through this area. It was this closing price, and then it served as resistance again. So it's going to take a close above 111.80 to expose the next resistance area up around 113.30. Notice how it was support here, and then it flipped to resistance. Now, a close above that, of course, would take on our previous target at 114.50. Now, perhaps the most significant piece of last week's rally was the fact that the Euro USD, despite being down in the month of March, ever since it started to move lower back here, actually turned positive for the month. So this candle right here was the first candle of March. So 110.50, as long as 110.50 stays intact and the pair stays above it, March could close positive. And that's significant because if we see the Euro USD start to take out this resistance area early this week, we could have a bullish engulfing month on our hands. So that's something to keep an eye on as well. So 110.50 is going to be support. 111.50/80 is resistance. But I do favor longs here just given the way that the pair has come off of this channel support area after that false break below it. That's especially true if we see the pair start to take out 111.50/80 on a daily closing basis. Next up, we have the British pound versus the US dollar, or GBPUSD, and this thing went on an absolute tear last week. So after reaching all-time lows below that 120 handle, which was the previous 2019 low back here, you can see where 114.50, this support area that I discussed last week, sent the pound on an absolute tear back above 120 and even back above 122. We also saw the pair take out this 123.80 area on Friday. So as long as the pair stays above 123.80, we could see a run at 125.70. Now keep in mind that we also have the bottom of this descending channel to deal with just above that 125.70 area. So as of right now, with how aggressive this rally has been, I can't justify trying to sell the pound even if we do see some type of bearish price action up here. And to be honest, it's a little trickier to figure out than the Euro USD, which is why I favor the Euro over the pound right now. But again, given how aggressive this rally has been, I do think that longs are favored here while we stay above 123.80. Just keep in mind that you have to factor in the volatility, that increase in volatility over the last few weeks. So if you've been trading 2% of your account, you should probably think about dropping that down to 1% if you haven't already, or perhaps even less. Trade 0.5% of your balance on every trade to account for that increase in volatility. Because right now we are seeing volatility that's 4, 5, or even 6 times higher than what it was back through this area. As for key levels though, this area through here, 125.70, perhaps up to 126.20 is going to be resistance. 123.80 is support. A close above this area up here would take on 127.70 and perhaps even the top of this descending channel. But again, I have to reiterate that the pound is a bit trickier to figure out than the Euro USD. So while you could try to buy from 123.80 or perhaps even a close above this area up here, do keep in mind that this is an incredibly volatile pair, and we also have a lot of key levels to deal with just above Friday's closing price. The dollar yen played out perfectly for us last week. If you saw on the blog, I talked about this one twice, where I noted this consolidation up here, which hinted at exhaustion from buyers, which I'll get to in a moment. And then we also had this retest of the top of that multi-year wedge. So this is a pattern we've been discussing now for several weeks, where we have this multi-year wedge that extends from the 2015 highs and the bottom extends from the 2013 lows. So back here, we saw the same thing happen where the dollar yen closed above it, and then this close below 109.80 confirmed the false break. All right, so this close right here allowed us to get short for a move down here into the bottom of that wedge pattern. So the same thing happened here. We had an immediate retest of support. The pair was looking really weak. We then on Friday got a close not only below this wedge top, but also below 108.50, which was the next key level that I discussed on the blog. So let me show you why I decided to get short the dollar yen. And for that, I have to move into the 4-hour time frame to show you the exhaustion signal that I got up here. So first of all, we do have an ascending channel that extends from the current 2020 low. So notice how we have these lows down here that make up the bottom, and then we also have several highs that run along the top. Okay, so this close right through here was a signal to get short. However, I got short at 111.50 up here simply because of this price action right here. This rising wedge, after a swing high like this, signaled exhaustion from buyers. And this is exactly what I told members in the members only video last week. I also announced my entry in the member forums when the dollar yen was trading around 111.20. So this allowed everybody to get short through this area up here, and you can see how that short played out nicely through the end of last week. So for this week, traders can look to that 108.50 area to serve as resistance. Notice how it was resistance back here and also through this area. So 108.50 is resistance, and the next key support is going to be 106.80. You can see how 106.80 was a key factor back here as support, and then resistance, and then support again. All right, so 108.50 is resistance, 106.80 is support. Now, in the longer run, I would not be surprised at all to see the dollar yen take another run at the bottom of that wedge down here around 105.80. However, I also think that we could see a run at this recent low and perhaps even below it. That could take days, weeks, or even months depending on how much consolidation we get. But given these recent moves in the market, I wouldn't be surprised to see an immediate run at the bottom of this wedge this week with a break there taking on some of these lower levels like the 105 area, 103.30, and again, perhaps that recent low around 101.20. Next up is the pound versus the yen. And this one is interesting, not because I think we have an immediate opportunity, but because we could get a short opportunity over the coming days or weeks. So right now we have an interesting dynamic in this pair in that the pound has been strengthening, but the yen has been strengthening as well. Just take a look at the dollar yen. I'm not interested in buying or selling this one just yet. However, I do think that a move up here into this 136.90 to 137.50 area could be interesting over the coming days. Notice how we have this open gap up here around 137.50 that once it's closed, that could be enough to trigger a rotation lower. Furthermore, we also have this 134.25 area that Friday looks to have closed above it, but as I always say, it's going to come down to where Monday opens. If we see the pair gap lower and fail to close that gap, we could very well see a rotation down here into 131.20. But as of right now, I'm going to go ahead and stand aside on the pound yen because I want to see this one really come up here to 137.50, close that gap, see some type of bearish price action such as a bearish pin bar or engulfing candle in order to get short for a run down here into 134.25 and perhaps lower. So the bottom line is that the pound yen isn't a setup just yet, but this is one to keep an eye on, especially if we see it close that gap from earlier this year. The last time I discussed the euro versus the pound, we were talking about the potential for a bottom as it was coming off of this 8,300 area. And I even got long on this one, which I mentioned on the blog and in the members area. And I rode this one up here into this 87.50 area. However, as you can see, I got out way too soon because from this low down here to this high, this was a 1,200 pip run, which for a pair like the euro pound that doesn't move all that much in a day, that's a massive, massive move. Now, here's what's happened recently. If you look at the weekly time frame, we have this descending channel that extends from these two lows down here and of course these two highs. Now, this makes a lot more sense when I move into the daily time frame because you can see how the pair broke above that channel on this candle right here, and it even held as support over several sessions. However, this candle right here closed below it, and you can see how the top of that channel began to serve as new resistance. Furthermore, the pair also closed below that 90.10 area on Friday. So notice how it was support back here, and you can even see how 90.10 was resistance right here, support, resistance, and even some resistance through here. All right, so going forward, I like the idea of looking for a short opportunity from 90.10, but keep in mind that 8,900 is also going to be support. So if we see some type of bearish price action form at 90.10, we could see a rotation lower into 8,900 with a daily close below that, taking on the next key support down here around 87.50. Notice how 87.50 was a factor back here, and it was also resistance through this area. So the long-term future for the euro pound is a little bit unclear. However, as of right now, again, I like the idea of looking for shorts from 90.10 with a move back into 8,900, a close below that, taking on 87.50. Now, if we see the pair close above this 90.10 area, so if we see a daily close at 5 p.m. Eastern above 90.10, that would negate the idea, and it would also re-expose the top of that channel. But as of right now, as long as 90.10 is intact as resistance, 8,900 is exposed with a close below that, taking on 87.50. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.